Mehrab, good morning. It's a pleasure to have you with us here. Thanks very much. Has the market settled down, Mehrab, you think, after all the volatility and sell-offs last week?
Good morning, Prashant. It's very nice to come here today to your studio. Yes, maybe for the time being, market has slightly settled down and the expectation of the budget start building up. But overall, if we see the third quarter results also, which most of the companies have declared, they are not very encouraging. Today, if we see, there is a marked slowdown in the top line of many companies. The volume has been declining or slowing down in a lot of consumer sectors, retail sectors, two-wheelers, etc., which is not a very encouraging sign. Today, if we see, the pricing power in the manufacturing sector is very low. The gap between the real and the nominal GDP has actually dwindled, which is affecting the pricing power. If you see, the bottom line has been still maintained because the gross margins are at a multi-year high due to the fall in the commodity prices.
Yeah.
Yes, we agree that people talk that there is a global slowdown and all those problems are there. Yes, that is certainly there, because today if we see in the world, there is a lot of excess liquidity while sluggish growth is there. And the China factor is obviously something to worry about, because China accounts for almost 25% of global GDP. And if we see on an incremental basis, it will be close to 40-45% if we take the multiplier effect on emerging markets. But locally also, if I see, I think there are some challenges which we need to address. If we break down all the components of GDP, say consumption, investment, government and exports, I think all of them are suffering. If you see consumption, the rural consumption and growth has been bad for almost 2 years because the monsoons have been bad. If we see the urban consumption, yes, that is also slowdown, which we see the results of many urban-based consumer sectors, also entertainment sectors, etc. If we see on the investment side, yes, the private sector is in no position to invest. A lot of their old projects are suffering, ROEs have dwindled, and that is what is affecting the banks today. Many large PSU banks have almost 8 to 10% gross NPAs, which is very unimaginable. Also, if we see on the government side, yes, the talks are happening, but I think besides few sectors, maybe roads or railways or defense, I think actual investment has to happen from the government side to kick off this investment cycle. Even on the export side, if we see, there has been some slowdown. Also, pharma, which is a big export sector for India, it has been grappling with a lot of US FD and other problems. Even the large and the small companies in that sector are facing some headwinds from there.
Yeah.
And so I think the factors are slightly challenging, and we need to address some of those factors before which, we again start our investment climate.
So what I gather from what you're saying is, after such a sharp fall, almost 25% fall from the peak, expect the market to maybe pull ahead a little bit. But from a slightly longer term perspective, the rest of the year, for example, you're not that positive, right? You're not really. It's tough to find reasons to go out and buy a lot of stocks at this point.
Right. Today, if we see the valuations, yes, we are almost at 14 times forward earnings, which is close to the bottom of the range in the long-term valuation. But at the same time, the ROEs have also been affected. ROE is almost 150 to 200 basis points below long-term averages. So it's difficult to justify why there will be a revaluation at this point of time, unless we see a turnaround in the economy, and a turnaround in earnings can be projected with reasonable certainty.
And that confidence that will turn around is not there.
I don't think as of now it is there. If we see over the past few quarters, every quarter analysts used to start with almost 14-15% growth. And after every quarter by quarter, they had to downgrade. This quarter, obviously, the expectations were slightly muted. But the results have also met just those muted expectations in some cases. Some cases are disappointed also.
Yeah.
So I think there is no case for the revaluation. Yes, we are fairly valued or maybe below that, but I don't see immediate case for revaluation also.
Yeah. Just a quick word on, so you think the last week's lows will be retested? Not immediately, but through the course of the next couple of months?
I think that it might be retested. I think so, yes.
You think it might be retested. And then from there, do you think there is meaningful downside from there? Say 10% from last week's lows? Another 10% from last week's lows?
I think that's a very much possibility. Maybe 5 to 10% low, further low from last week's low might be there, but maybe not immediately. I think maybe after a few weeks, or we have to see how the global and also the local scenario and the budget, etc., pan out.
10% from the lows of last week will get us to about 6350 on the Nifty, which is the double top essentially on the market from where it broke out before the government took charge, which is late 2013 or so. And many believe that is kind of the Lakshman Rekha, right?
Yeah, talking about Lakshman Rekha, first time that 60-50 was touched in January 2008, which was after a big bull market between 2003 to 2008. I think it was retested in some November 2010. And then after that, when the Modi government came, we entered a new bull market.
Late 2013, that took off, yes.
Correct. So maybe it may retest those levels.
Okay, it's possible. And what happens if we do that? I mean, any significance of that? I mean, then the euphoria is gone. I think the euphoria is already gone, right?
Yeah, the euphoria is gone, but still people are not that pessimistic. Bear market bottoms or whatever, whether it's a bear market or not, we don't know. But the bottoms are made when there is excessive pessimism. So I think
that is still not there.
I don't think that is still there, because today also, if we see the commentary of a lot of people and the mood in the market, it's still people are not. Still people want to justify this fall. So till that happens, I don't think that we have made a bottom.
Okay. You're sounding bearish today, Mehrab.
It's not bearish. It's trying to be a little realistic.
Absolutely. So, what do you think this is based on? You listed a lot of reasons right in the beginning of your first answer, but are you worried about the local situation also quite a bit?
Yes, I think so. I don't.
If you cut out the global,
right,
which is which one can't, which one doesn't have a handle on, but the local situation.
Yeah, I
local
think
drivers,
so.
Yes.
Yes, global factors are anyway, we discussed, they are not very encouraging and challenging at this point of time. But yes, I think some factors which I mentioned, the local factors also have to be addressed. It's not that they are something bad or something, but there are some challenges. I think we have to address those challenges, whether it is a banking sector, whether it's the investment climate, whether it's a consumption. So I think those sectors have to be addressed by the government. And I think first, because of private capital, I don't think is in any position to address any of the concerns at this point of time. So once those concerns are addressed, I think then we will be in a firm foot of good growth for the economy and the markets.
In terms of trajectory, is it possible we rally to the budget, post the budget, there is the sell-off again? And then what you're saying, the levels, etc., that you're talking about plays out?
Yeah, maybe that might be, because I think next few days there will be a lot of budgetary expectations which will be built up in the market, and with the support from the global markets also, I think we might have a small nice rally up to the budget. And after that, depending on what the budget has to offer, then the course of the market will be decided.
It's kind of interesting. Maybe it is a function of the market as well, right? Because we are all creatures of the market. The point is, there is no euphoria leading up to the budget as well. No, feel-good pre-budget stories as to what this can happen, that can happen. I don't know if you've been able to find any. I've not been able to find many in terms of what the government may do, will do, can do. You see that starting, and the budget is not very far away, 10 days from now.
Yeah, actually, that is very surprising. Actually, the mood has become so somber in the market. Generally, at least 4 to 6 weeks before the budget, people start talking with expectations and this. But this time, I don't think we are witnessing that much. In fact, whatever talks, people are a little concerned that if the budget, does not deliver, then in such a scenario, it can be again very bad for the markets.
Yes. One specific issue which has come up in my conversations with people is the entire issue on capital gains exemption for stocks, right? The current rule is you hold stocks for more than a year, you don't have to pay capital gains, long-term capital gains. There is talk, I don't know how credible it is, but there is talk that the threshold might be made 3 years. You got to hold stocks for 3 years. Are you picking that up as well? And would you say this is, a credible concern?
Yes, we are also hearing some whatever news on capital gains. But if we make it from 1 year to 3 years, it would still, I don't think it is actually a reasonably positive measure, because I think equities are for long term and they should be encouraged to be held for long term. But however, at the same time, if we remove the long-term capital gain exemption, that I think would be very bad. I think at this point, we are looking at encouraging new investors, and with this, we have almost 50% population below the age of 35 years, and we want to encourage all those people to come to the equity markets, and that will give good support to the markets in case of such kind of global sell-offs. So if we want to encourage new people, I think offering tax exemption and capital gains tax exemption is the biggest incentive which we can offer to our younger generation to incentivize them to invest into equities. I think if that goes, it will be a serious problem. Today, if we see tax-free bonds are available at almost 7.5%. So if somebody is getting a tax-free bond from the best rated government companies at close to 7.25%, then there is little incentive for a young person to invest into equities if you again make it taxable. So I think this tax exemption on long-term capital gains should stay. I think that is a very good incentive for the people to invest into equities.
Mehrab, thank you very much. Quick conversation today, shorter than usual. Appreciate you coming down to our studios.